Hello, everyone. This is Matthew Frailey, founder of BreakpointTrades.com. We've been here for over 20 years, providing advanced technical analysis, market commentary, trade ideas, and advanced mechanical trading systems, such as our 21 mean reversion systems, which are about 90% winning trades. Those have been active for many years on the website. We send trade notifications to our subscribers, and of course, our most recent KISS systems, which we're very excited about. Hoping to launch a new version of that here perhaps next week. Again, we'll get back into that. I hope everyone's having a good day. And let's get back to this newsletter at hand. This is a newsletter recording technical analysis for the market. It is Wednesday, March 13th, 2024. Again, hope everyone's having a good day. This newsletter is divided into 7 major sections. Again, if you've been following Breakpoint Trades, this is the general format we keep. We do a top-down approach. We have our opening discussion. We talk about the major indexes, important levels that we see. We look at various custom indicators, bonds. We do a sector overview. We look at the US dollar, commodities, cryptocurrencies, precious metals, and actionable trade ideas. And we also talk about our mechanical systems too. But anyway, today, as far as the market, it was a bifurcation day. What we mean by that is for the major indexes, for example, the Dow and S&P closed slightly positive, while the S&P and Nasdaq closed down. Now for the week, the Dow, S&P, and Nasdaq are up while the Russell is down. Again, no changes, guys, technical changes from my discussion on the weekend or on Monday. Support levels remain intact on the indexes and sectors. Quite simply, the bulls are in control of the football, using a football analogy, and until that is intercepted, the trend remains up. Again, that doesn't mean you throw caution to the wind. You still have to keep your discipline, trade your plan, have exit strategies, stops in place, etc. Otherwise, if we get another push here, I'm targeting 5,200 for the S&P. Would be the next target for the S&P 500. Sorry, I can't talk today. As far as other things, precious metals have done awesome, as well as cryptocurrencies. Obviously, that area has been in fuego, and the Chinese market's been very strong. We've had recent long ideas, these ETFs, FXI, yen, and of course KWEB. They've all done extremely well. As you know, that market was depressed at multi-year lows, unlike our market. So to me, that was kind of a lower risk bottoming play. And the energy market's also been very strong. And as far as news this week, guys, Thursday, PPI, that's the producer inflation index. Remember, we had the core CPI on Tuesday and came in hotter than expected, but the market still went up. So Thursday, we have the PPI producer inflation data. We'll see how the market reacts to that. We have retail sales, initial jobless claims, and natural gas inventories. And also, Friday is quad witch for options. So be aware of that. It's always a market mover. Next. Before we get to the general market, just want to discuss quickly these KISS systems, the KISS system tables. If you haven't done so, remember, we have that weekly tab now. So the KISS systems are run on the weekly time frames. It's the same system that is run on the daily. And the difference there is they'll hold for much longer periods of time, sometimes 1 or 2 years. So it's a good option for folks who are not very active, but they still want a protection, say, for the next bear market. They'll do that. They'll keep you out of bear markets and strong market corrections that do occur. We also have that FAQ, read that. And this premium section, which we've been working on forever, it seems like we're finally getting close. I'm hoping to have that done perhaps by the weekend, and maybe we can launch it next week or the week after. Looking forward to that. And again, if you haven't set up your favorites here, make sure to do so. If you're not a subscriber, check out this area to become a subscriber. Otherwise, here on our BPT basket, you can see BIDO, that's the Bitcoin leveraged ETF, had a new smart trailing stop generated today. AVGO, it's a semiconductor, it stopped out. It made 17.78%. So on the KISS tables, Areas that are highlighted in blue, that's where you got new smart trailing stops. In red is when the systems close out. And in green when there's new longs. There's no new longs here. Otherwise, you could see some of the awesome gains here. And these have all been real gains, guys. So had you been a subscriber to Breakpoint Trades even just the last several months, again, you could have paid for your membership years or lifetimes over. Next, image number 3. Here is an example of one of the high performance systems that we'll be adding to the KISS tables. This is MSTR. That's a crypto stock. As you know, it's been on fire. This is a 30-minute time frame. So currently, the standard KISS systems are daily and weekly. So the high performance will use smaller time frames to get more turnover and more trades. And there's some optimization that goes on there. But for MSTR, I mean, you can see these nice trades. I think the average hold time is something like 8 days. But just take a look at this. It's caught all the movement in MSTR, and MSTR has been absolutely insane. It was in the $400 range back in early February. It's now nearing $2,000. But you can see nice long back there. Another long, went flat. Then went back long, went flat, went back long, and it's still long with a stop at 1487. You can see some of these recent trades here. The one in early February made 40%. The one in later February into early March made 55.8%, and this current trade is up 44%. So just these 3 trades over the last, month, up about 130%. Pretty crazy. Again, that's an example of one of the high performance systems. I'm going to be adding probably a good dozen or more that'll be on the website. And as a subscriber, you'll be able to get access to those. You'll be able to get email notifications and text messages. Anyway, let's move back to the general market analysis. So image number 4 shows the index sector table, what transpired today and this week. Again, you can see the bifurcation here at the major indexes, as I already discussed. And for the week, the Russell's down, the others are up. As far as the 21 market sectors we follow a broad view just to give a nice broad overview of the market. The majority were up today, a few down. Semiconductors were the weakest. They've been pulling back lately as technology. And energy area was strong. We've had some rotation out of technology back into some of these other areas, which is what you want to see. Currencies, US dollar down 0.1% today. Again, not much movement for the week. Cryptocurrencies, what can I say? Continue to be on fire. Bitcoin's over 73,000 now. Ethereum's been on fire, up around 4,000. And one thing I'll say about the cryptocurrencies, things like Mara, or not Mara, but MSTR, they're basically a proxy for Bitcoin because they buy Bitcoin, have been doing the best. But some of the stocks that mine, such as Mara, they're not doing so well. So just pointing that out. Commodities, the index, DBC, was up 1.4%, up 2% for the week. Crude oil up 2.8% today, up 2.2% for the week. Natural gas down 3.3%, down 8% for the week. Copper up 3.25% today. Some of the stocks are really taking off there, such as FCX, SCCO. Those are some copper names. Some of these moving in these commodities, it's not going to help inflation, is it, guys? And precious metals, well, they continue to be strong. Gold up again today, 0.7%. Silver up 3% today. GDX, the miners, up 2.4%. And as far as the bond market, market was up today despite the rally in the 10-year and 30-year treasury yields. Next, image number 5. Here's the economic news calendar, which I already discussed. Like I said, on Thursday, we had the PPI, core PPI, retail sales, initial jobless claims, natural gas inventories, and remember Friday's trip quad witch for options. And of course, you have other economic news here as well. Let's go and jump to the index charts. First chart below, item number 6, is the weekly snapshot of the 5 major indexes. Again, I'd just like to show this for a simple guide. The 9-week EMA is your support on your uptrend. We've been above that since we broke through that in late October, early November. And you can see on the Dow, we bounced off of it so far. And that's your major support, is the 9-week EMA. Next, looking at the indexes individually, here's the Dow Jones. I redrew this as a channel, which we're still holding. Again, moving averages here, the 9, the 20, the 50, they're all have a very strong positive slope. Again, no changes. We've had a MACD divergence here in place. Now, one thing I'll say here is the MACD is recycled back near zero. That's important because if the market wants to have another good rally, that's the place where it would do so. But also, whenever it gets closer to zero with the divergence, it's also a little more vulnerable there, but we'll see. Also, the 60 stochastic, which is our trending indicator, it's holding this 80%. You can see recently tested the 80%, trying to bounce off of it. Next. Number 8, here's the daily view of the S&P. Here I took out that upper wedge trend line, just monitoring the steep uptrend channel. Again, no changes, guys. We just continue to ride this uptrend. And here I added a trend line on the 5-length RSI. That'll be one to watch if that's broken. When that's broken in the future, that could be a good exit or a short trigger. But again, the Bulls have had this football and ran it down the whole field the whole time. They still got it, so no changes on anything. Next. Number 9, here's a zoomed in daily view showing that channel. Okay, and that's your guide. This uptrend line, if that's when that's broken in the future, that'll be important. But for now, we continue to hold it and continue to uptrend. Like I said, on another push to the upside, I'd be targeting that round number of 5,200. The market likes those round numbers. Next, chart number 10. Here's the KISS system. So no new smart trailing stops today. Still remains at 49.50. Again, should we get that next pop to 5,200? I think we're going to see this smart trailing stop jump over 1,000 or over 5,000. So that'll be nice to see. The system went long back here in October 31st, 2 days off the bottom. So did a great job there, setting the stops, moving them up over time. Next, chart 11. Here's the 4 time frames. Not a lot to say on the daily and half day. We're above the ATRs. Again, like I keep pointing out, the lower time frames, 130 minute, 78 minute. Notice how price continues to ping pong between the cycle indicator, between cycle support. Cycle support's the cyan color, cycle resistance is magenta, just bouncing off of each time. Today we got a little resistance cycle on 130 minute and on the 78 minute. I keep pointing this out because when I see behavior like this, where price is perfectly following the cycle, whenever you finally close strongly through one of these cycles, then you begin more of a trending move. So that's why we want to keep an eye on that. Moving on, chart number 12, here's the 2-hour view. Again, nice clean channel here to monitor. No changes, continue to hold that channel. Chart number 13, 60-minute view. Again, you can see that same channel just on the 60-minute time frame. We're basically right in the middle of that channel. And chart number 14, here's the 15-minute chart. Not a lot to say here, quite honestly. Moving on, chart number 15, here's the Nasdaq triple Qs. Again, you can see the channel as well. Largest pullback is 17.6 points. You know, pull back larger than that to break the uptrend symmetry. You know, you have to break the channel. So no changes on anything, guys, like I said. Number 16, here's the KISS system. Like I said, no changes. Smart trailing stops a bit tighter on here than the S&P at 427.70. System did a nice job going long 2 days off the lows back there. Number 17, here's the 4 time frames. Like I said, same behavior here you see on the Qs essentially as the S&P. Price is perfectly following these resistance, these cycles on these lower time frames. You can see on the 78-minute we had a resistance cycle. So again, we want to keep an eye on this going forward. I'll let you know whenever price breaks through one of these cycles because I think that'll be an important event. Number 18, here's a 60-minute, 2-hour view showing kind of a wedge here. You can also see maybe a little diamond here. You see this? And in fact, I could try to draw that in here. Let's see. Diamonds are kind of weird, rare patterns, or something like that. You see, kind of a diamond, sort of. Anyway, clear that out. But anyway, kind of a diamond or a wedge. Again, price could break here. You could see it's got room to go up in the wedge if it wants to. So Again, no changes. We're still in the same patterns. Number 19, 60-minute view. Should have redrew this one a little bit. You can see, again, you can see this diamond a little bit more clearly here. I'm going to go ahead and do that once I finish this newsletter and post that on our trading community. Again, we're going to keep an eye on some of these hedging instruments. Just continue to monitor these. I'm not really into these yet. SPXU, that's the triple inverse ETF for the S&P. It's still in this perfect downtrend channel. Obviously, we want to keep monitoring this. When it finally breaks that, I think that's going to be important. That'll be pretty good, pullback in the market. But for now, it's still downtrending. Number 21, here's the 2-hour view. Again, it's kind of in this wedge pattern. Hasn't broken out of it. Number 22, here's SQQQ. That's the triple inverse ETF for the Q. Still in the same channel, obviously. Chart number 23, FNGD, that's the triple inverse ETF for the FANG index. Again, got this little base forming, some decent volume patterns. If the tech area tops out first, this might end up being a nice trade. It needs to clear this 410 area. These would be some of the targets. And finally, chart number 24, UVIX, that's the inverse VIX ETF. Again, no trigger here. It's still in this like wedge pattern. So these are some hedges to monitor if the market starts to turn. Looking at some of the bigger stocks, here's NVIDIA. Remember, NVIDIA had that big pullback early in the week, bounced off the 9 EMA so far. So wonder if we got a little top in there or if this wants to hit 1,000. I do think this was the largest pullback in the uptrend though. That would favor more of this being a lower high. Certainly has had a hell of a run. Chart number 26, here's Microsoft. Remember I said last week and early on the weekend, I said you could go long with a stop just below that 50-day moving average. It's moved up nicely here. Pulled back today after trying to break out of the pattern. To me, it looks like a wave 3, 4, 5. Number 27, Apple. Apple bounced initially off that little demand zone, but now pulling back again. You can see it stalled right at that 9 EMA. Remember, that's always your first short-term support or resistance. This is a great short from back here. Apple's been super weak. Number 28, Google. This has had a nice mean reversion bounce off that 200-day moving average and clearing the downtrend line today. Got the 50-day moving average just above though. Number 29, Amazon still in the uptrend here. There is a pretty good MACD divergence to be aware of though. And chart number 30, Tesla. Poor Elon. Tesla just keeps weakening. It's that recent bear flag we pointed out and continues lower. Honestly, these targets below, these look like the next targets. You got a demand zone right here around 150 to 160, and there's an open gap from back in January 2023. So those could be magnets to the downside. Next. Chart number 31, here's the Russell IWM. Remember, it's into the supply zone. Certainly an awesome rally from last October off that support low. Chart number 32, IWM. Again, no changes here, still holding this uptrend. And we're going to continue to monitor. And finally, chart number 33, IWM on the 2-hour, still in this kind of wedge channel-like pattern. Again, nothing's broken support yet, guys. So we'll see what happens tomorrow, and let's go ahead and move on. Chart number 34, here's the VIX. The VIX yesterday, Tuesday, it spiked outside its upper Bollinger Bands. It came back inside, and since then it's melted down. Remember, you had your VIX S&P buy signals back here, and they all played out nicely. Next, chart number 35, here's the S&P versus the inverse VIX ETF. Again, the two are very correlated. So we're going to continue to monitor this if we start seeing some turn here. Obviously, nothing yet. Chart number 36, here's the NYSI 9 EMA crossover system. As I stated, this has been on a buy signal technically since November. It never confirmed the sell signal up here. So I think the next time this crossed to the downside, that could be a good sell signal. But clearly, it's nowhere close yet. Chart number 37, here's the 10-year Treasury yield. Nice bounce the last couple days. Hasn't hurt the market yet, though. Chart number 38, here's TLT. Still in this downtrend channel. Price risk stalled at the downtrend line. Chart number 39, high yield corporate. Still meandering higher, holding that 9 EMA. Let's move on to the market sectors. Driver 40 here is semiconductors. Again, they've been pulling back. They were quite extended last week, with that big move. So pulling back a bit. Below the 9 EMA, but nothing else to say. Driver 41, XLK technology, down today, but again, still above support levels. One group that's been strong are the financials, XLF. Man, look at this move. And it just continues to strengthen. So money's been rotating into here. Another area, here's the banks, BKX, been meandering higher. Honestly, this open gap looks like an easy target. Driver 44, transports, been going sideways here. Notice you got the 9 and 20 MA squeezing, so we'll see what that results in. Driver 45, industrials, again, no changes, continues this nice uptrend. Driver 46, materials, moving nicely. Again, there's a lot of commodity type things in there. And again, doesn't bode well for inflation. Driver 47, home builders, continues making new highs as well. Driver 48, healthcare, which has been in this tear. Very steep uptrend channel. We're still holding that channel line. And the area that was strong today, like I said, energy, this continues to strengthen. Look at that nice move in XLE now. Driver 50, oil services, also moving nicely. Again, hope you guys went long when these broke their channels or wedge patterns. Chart I haven't shown for a while is the bullish percent energy index. I've been talking about the BPGDM for the gold stocks, but this is for the energy names. Remember, this gave a buy signal on that cross a few weeks back, and it's been playing out nicely. It's moved up to 69.5%. Someone was asking me where this was. It's still way off of overbought territory up there in the 90s. Some individual names I've had on the list in the energy sector. Valero, huge move today, gapped up and was up 5.25%. You got a cup and handle pattern here. It's been playing out beautifully. Driver 53, ExxonMobil, the bellwether, just continues up off the highs today, but it's been a nice trade from our January entry. And one of my long-term favorites, this weekly or monthly pattern, this big coil. So far this month, it's up 4.6%. Next, the Chinese market's been very strong. Here's yen. It was up over 4% today, but closed off the highs, up 1%. But again, it has this higher low, potential inverse head and shoulder pattern. Driver 56, KWEB, another Chinese ETF, been doing nicely. Again, the Chinese market, remember, was extremely oversold, unlike our markets. Moving on to the commodities, here's DBC. This is the weekly, up 2% for the week. I'm just showing the weekly. You can see a big potential coil. Driver 58, crude oil, up today. Between support and resistance, Driver 59, natural gas. After that little three-wave wedge pattern, it's sold off strong. There's an open gap there, but if it doesn't bounce there, this could make another low quite easily. Driver 60, there's the weekly. So a few weeks ago, it bounced off that long-term support going back to 1995. It's pulling back now. Driver 61, copper, strong move, up 4.3% this week, breaking out of this coil. I'm not showing the charts tonight, but the copper stocks are really doing well. Had a great day. Driver 62, DBA agriculture. Nice move out of this high and tight flag. I had it as a long back here in January off that pattern. And Driver 63, the weekly. This cup and handle has been playing out since over the last 2 months. Been a nice trade. Moving on to cryptocurrencies. Driver 64, Bitcoin up and away. Almost 74,000 now. Quite honestly, that 100,000 round number isn't too far away now, is it? Got a little RSI divergence to monitor here, but man, this has been strong. Driver 65, there's the weekly chart. So our best guess is this is some sort of wave 3. Why is that important? Because when you have a pullback, it should only be a wave 4. Then you get another high as a wave 5. Maybe that wave 5 will tag the 100,000 area. Driver 66, Ethereum, again, up and away, playing catch up. Hit a high of 4,100. Jabber 67 Ethereum ETF has done extremely well. We did it as a long idea back on this trend line break. Hardly see it now because it's so compressed. The trigger was around $20. Jabber 68 MSTR. This has been the monster. MicroStrategy. They buy Bitcoin, and so it's kind of a Bitcoin proxy. And look at this sucker. Holy cow. You know, we hit it as a long back here at $530. It's now up over 300%, you know, in just in a month, essentially. It's just absolutely insane, guys. Now, while this has been strong, some of these other stocks that mine have not. Here's Mara. I mean, look at this puppy. It's been selling off for 3 weeks with Bitcoin making new highs. Jabber 70, even Kathy's Coinbase has been weak here the last few days. I mean, it's definitely done a lot better than Mara, but it hasn't. You can see it's lagging. So MSTR has been the star, clearly. Jabber 71, US dollar, pulling back here. Remember, it broke that support a week ago. That's definitely helped the precious metals. Let's move on to that. Jabber 72, gold. After yesterday's pullback, bouncing again at the 9 EMAs, your current support here. Like I said, you had confirmed buy triggers on that coil break, the GDX GLD ratio trend line break, and the RSI trend line break. Excellent move of gold. Jabber 73, there's the weekly. Nice breakout. Jabber 74, there's the weekly with the ratio. I still ultimately want to see the ratio break up through this channel. Jabber 75, again, I've shown this so many times. This is the monthly chart of gold. So again, the bullish view would be that we're in this wave 3. If it's a wave 3, right? And you can see 1, 2, 3. This wave 5 pattern could take gold up to 3,000 quite easily. I've always said that gold will have its day along with Bitcoin. Jabber 76, silver, big move today, up 3%, bouncing right off that 9 EMA. Jabber 77, silver, the monthly chart, this big old 4-year coil. I love this pattern. When this breaks out, guys, it could be a monster move. Jabber 78, here's the BPGDM GDX trading system, the Rinko chart. Remember, gave that excellent buy signal a few weeks back. It's been playing out nicely. And this is only up to 32% now. So it could have a long way to go. So moving on to GDX, here's the weekly. Up 2.2% this week so far. Nice rally off that lower coil. Jabber 80, here's GDX on the daily. Again, awesome rally off that demand zone and channel. In fact, it's above that 61.8 fib. You had confirmed buy triggers as well in the ratio trendline break and the RSI trendline break. Jabber 81, here's that 2-hour view. Again, awesome move. We got into that supply zone, pulled back a little bit yesterday, but bounced again. Here I added a trend line and a GDX GLD ratio. If that's broken, then maybe we'll finally see a pullback here. Again, like I said, an ABC pullback would be an excellent buying opportunity. Just the question is, can it occur here or is it going to occur at higher prices? Either way, pullback is a buying opportunity. Jabber 82, there's a 60-minute view. Following up on the others, here's GDXJ. That's the gold miner junior ETF. Again, excellent move from that support level, demand zone. Jabber 84, SILJ, same deal. It's a silver miner ETF. Hell of a rally. The individual names I've had here is AU, Anglo Gold. Hell of a move out of that coil into that supply zone. So yesterday it found support near the 9 EMA. Today recovered back to that area. Jabber 86, EXK. Now this was off the highs, but it's been one hell of a trade, percentage-wise, from that trend line break. It was a lower risk, lower priced one that I put out a couple weeks ago. Jabber 87, RGLD, another one that's moved up very nicely. Again, they've had big moves here, guys, so eventually I'm looking for a pullback. Jabber 88, FSM, made another new high today. Hell of a rally. And Jabber 89, BVN. Well off the highs today, but it's been a nice trade out of that pattern. Jabber 90, Newmont. That's the largest component of GDX. Remember, it rallied off that long-term support from 2020. Jobber 891, GOLD, rallied off that long-term support. Following up finally with the other trade ideas. Jobber 92, Advanced Auto Parts. I've had it on the list for a while. This big inverse head and shoulder pattern. I have it on the list for almost a month. The trigger was back here around the 64 area, breaking that trend line of the channel. And it's just been up and up ever since. You got a potential big inverse head and shoulder pattern if you felt like giving it some room. Because if that's the pattern, this should go much higher still. Jobber 93, Dollar General. Again, awesome trade from that coil. Today, pulled back, bounced off that 9 EMA, found some support. Jobber 94, AQN. This is the utility I put out. Now look, notice guys, it rallied and broke out of this resistance on strong volume. It's pulled back on lighter volume. This retest of this broken trend line could be a low risk long with a tight stop below it. Jobber 95, ZIM. Remember I put this out as a short idea on the weekend. Finally playing out today. This was the first target, this supply zone, demand zone I mean. Jobber 97, Blink. It's been on the list for a while, trying to trigger here a little bit. I like this coil pattern. Jobber 98, MBLY. Triggered today a little bit over that trend line. Again, if you're long, put a stop right below that 50-day moving average. Jobber 99, SLRN. Been on the list of this little bottoming channel. Hasn't triggered, still monitoring it. Jobber 100, Comp. Little low price stock, kind of an ascending triangle forming. Got a little three-wave pullback here. You could attempt a long here with a pretty tight stop versus waiting for it to go up and take out the 4 area. Jobber 101, Pfizer. Steve had on the list last night, tried to trigger today, pulled back. It's been an extended downtrend for quite a while. Jobber 102, Apollo. Steve had it last night, triggered, but pulled back. I didn't add any new ideas otherwise, guys. Again, we'll see what happens tomorrow. Like I said, thank you for your support of Breakpoint Trades on YouTube. Like, subscribe. If you're just a YouTube subscriber, consider subscribing. And if you do subscribe, write in. I can give you some help. There's a lot of info at Breakpoint Trades. It can be overwhelming for newbies. And I'm willing to give you a walkthrough with a private Zoom meeting. All right, that'll do it. I need to go work out, get out of the house here, then ride the computer all day. Have a great evening. Take care.